Hi and Assalamualaikum warahmatullahi wabarakatuh. My name is Athifah binti Abdul Ghazi and my student ID number is 62211224526. Today I will explain about the methodology of this research and also the calculation of liquidity risk analysis. For this assignment, we applied a structured and data-driven approach to analyze the risk-based financial ratios of public bank Berhad. The bank was trusted because of its strong financial performance, transparent reporting, and the availability of Islamic banking services through its subsidiary, Public Islamic Bank. All the data used in our analysis was taken from Public Bank 2024 Integrated Annual Report, which complies with the requirement to use financial data not older than 2 years. As per the lecturer's instruction, we only focus on the high-quality liquid assets HQLA component when addressing the liquidity coverage ratio and the net stable funding ratio NSFR without using any external regulatory disclosures. We collected key financial figures such as total financing, deposits, liquid assets, capital, and cash balances. Our analysis covered 5 main categories: credit risk, market risk, liquidity risk, Sharia compliance risk, and capital risk. Each ratio was manually calculated using the formulas provided in the assignment guidelines. We then compared the results with relevant regulatory standards and industry benchmarks to evaluate the bank's performance. To support our understanding and provide context for the ratios, we also refer to academic journals and financial publications. Now, we are going to look at calculations of liquidity risk analysis. First is liquidity coverage ratio. Now we look at the LCR formula. LCR equals to high quality liquid assets HQLA divided by total net cash outflows over 30 days. For the liquidity coverage ratio, we focus only on calculating the high quality liquid assets as instructed. Hence, this is the calculation. HQLA equals to cash plus statutory deposits plus government securities at FVOCI plus government securities at amortized cost plus money market instruments. This is the figures: 9.5 billion plus 5.1 billion plus 30.5 billion plus 12.3 billion equals to 60.6 billion. Although we did not calculate the full LCR, this high level of HQLA clearly shows that public bank has a strong liquidity buffer. This means they are well prepared to handle short-term financial shocks or unexpected cash outflows in line with the regulatory expectations of Basel III. Next is net stable funding ratio. The formula is NSFR equals to available stable funding divided required stable funding times by 100. For public bank, customer deposits were used as available funding, totaling 318.14 billion ringgit. The base required funding based on residential and non-residential property financing came to 174.25 billion ringgit after applying the 85% rate. This gives an NSFR of 182.54%. This high ratio shows that public bank has strong long-term funding and is well prepared to manage liquidity risks, ensuring stability even during financial stress. Third is financing to deposit ratio. The financing to deposit ratio, or FDR, is calculated by dividing total financing by total customer deposits. For public bank, this gives us an FTR of 99.58%. This result shows that the bank is using its deposits efficiently to support financing activities while keeping a small buffer below 100%. It reflects strong liquidity management and aligns with Bank Negara Malaysia's guideline to keep the FTR under 100% to avoid over-reliance on customer deposits. Furthermore is liquidity gap ratio. The liquidity gap ratio is used to see how much of a bank's short-term liabilities can be covered by its liquid assets. For public bank, we added up cash and financial investments, which gave us about 64.71 billion in liquid assets. Then we look at short-term liabilities, which include deposits from customers and other banks totaling around 334.51 billion ringgit. After calculating, we got an LGR of 19.5%. This means public bank can cover about 1/5 of its short-term obligations with its most liquid assets. While it's not very high, it's still within a safe range for a big bank, showing they can manage short-term payments without stress. Lastly, cash ratio. The cash ratio is calculated by dividing cash and cash equivalents by total deposits and multiplying by 100. For public bank, this works out to about 3%, meaning they keep 3 ringgit in cash for every 100 ringgit of customer deposits. In simple terms, public banks maintains a moderate level of immediate liquidity. This is typical for capitalized commercial banks that have reliable funding sources. They don't need to hold large amounts of cash on hand because they can access funds quickly when needed. In conclusion, for this assignment, we took a structured, data-driven approach to assess public banks' risk-based financial ratios. We selected public bank because of its strong performance, transparent reporting, and its Islamic banking services through Public Islamic Bank. All data came from the 2024 integrated annual report, ensuring it was up to date and relevant. We focus on 5 key risk areas: credit, market, liquidity, Sharia non-compliance, and capital risk. All ratios were calculated manually using the provided formulas, and we refer to regulatory standards and economic sources for the context. On liquidity, although we didn't compute the full liquidity coverage ratio, we calculated the high-quality liquid assets at over 60 billion, indicating a strong buffer to handle short-term shocks. For long-term liquidity, the net stable fund ratio was 882.45%, which is well above the required threshold, showing excellent stability. The financing to deposit ratio was just under 100%, showing public bank is using its funds efficiently without over-relying on deposits. The liquidity gap ratio came in at about 19.5%, suggesting the bank can handle 1/5 of its short-term obligations with liquid assets, a decent position for a large bank. Lastly, the cash ratio was 3%, meaning 3 ringgit in cash is kept for every 100 in deposits, again showing confidence in its funding assets. Overall, the numbers reflect strong liquidity management and solid financial health for public bank.